Late last month, Donald Trump made news when he said he would pull a Brexit ×5 in the U.S. presidential elections. Keep in mind, millions of Britons switched off their TVs on Thursday night, June 23rd, fairly confident that the status quo would remain. But by Friday morning, the polls were proven wrong. The UK had voted to leave the EU, and it's led some to question whether Trump could actually do this. Could he pull off a Brexit-style upset? That's the question we're going to toss to our expert panel right now. Let's bring in Peter Schiff, founder of Euro-Pacific Capital, and also Ed Harrison, RT's very own in-house financial analyst, and also my esteemed partner in crime on Boom Bust. Ed, I want to start with you because you were in the UK when Brexit happened, and I get the sense that you weren't as surprised that they did actually vote to leave. But tell me, when we hear these comparisons, these parallels, do you buy it?
I don't really buy it in the sense that when we look at Brexit, the disparity between the votes it was a lot less. We're talking about 52-48 or 51-49 coming out versus here. I think that really Trump has to run the table in order to get it done. We were talking off camera before about Florida. Really there are very few combinations that get Trump to where he needs to go. So really, I don't think that it's going to happen. And most people see the chances of that happening as less than it was in the UK.
Peter, do you compare it to Brexit?
Okay, so Peter can't hear us.
Oh, I didn't. No, I did. I didn't realize that he said Peter. Hi, Larry. How are you?
I said Peter.
Well,
Peter.
It could. Yeah, it could be like a Brexit moment. And, if this election were a referendum on the economy, Trump would win in a landslide. But, there's so many other issues that are clouding people's decisions. But look, this recovery, this Obama recovery, for most people is actually worse than the recession that we're supposedly recovering from. The middle class has been eviscerated. Nobody has been lifted out of poverty. And I think Donald Trump is striking a real chord. And I think the media, which still has been enamored by Obama and believes in this phony recovery because they believe their own hype, I think they may be underestimating the outrage that the average American feels, and they really want to change the dynamic. Barack Obama promised change, but delivered more of the same, and I don't think people are going to buy the empty promises from Hillary, where she's going to succeed where Obama failed. So there could be a sentiment, a vote for Trump that is maybe not being picked up in the polls, and that might be a similarity to what happened in the UK with Brexit.
So, Peter, how do you explain Obama's popularity?
Well, I think that Obama is popular. People want to like him. He's a personable guy. But, the economy itself is a disaster. So people, I think, are separating the economy from Obama. Yeah, they like him, but he didn't do a good job. He didn't deliver on his promises. And, why do you think Hillary Clinton had such a hard time in the primaries? Because so many Democrats were frustrated with the last 8 years that they were willing to go for Bernie Sanders and not Hillary Clinton, because she was more associated with the Obama failures than he was.
Well, let's talk about markets, Ed. What we do remember happening in the wake of Brexit is the pound dramatically falling, markets going crazy. What do you think we're in for after tonight's done?
Yeah, so two scenarios here. So we're looking at Trump or Clinton. If Clinton goes, it's the status quo. I think that's largely priced in. You're not going to see a huge hiccup one way or the other. If Trump were to win, then we would see a somewhat Brexit-like scenario. But when people talk about Brexit in terms of the scenario would happen, really you have to separate the immediate short-term impact of the vote from the longer-term impact, the medium to longer term in terms of the actual economy. Because really when it came down to it, we're back to where we were in everything except for the currency. The stock market is back to where it was before. Bond rates are back to where they were before, or even higher, because the economy in the UK is doing better than people expected as a result of Brexit. So if Trump were to actually win, really you would see a hit. But what's the impact over, say, the next 3 to 6 months?
So are you saying that you think the election is really less consequential than, say, real economic indicators?
Exactly. The real economic indicators that we're going to see in the next 3 to 6 months, and you can look at oil as the crash in oil by 15% is much more important than the election over the medium term.
And Peter, do you agree? I mean, do you think it will ultimately be much more about the economy than this election?
Well, in the long run, of course, it's about the Fed, because it's the Fed that's the only thing propping up the inflated stock market. But, you know, the traders have decided that a Trump victory is bad for stocks and good for gold, and a Clinton victory is good for stocks and bad for gold. But, you know, I don't believe that. I mean, the knee-jerk reaction may reflect what everybody believes, but when the dust settles, it is not good for the U.S. economy, for business, or long-term for the stock market to elect a liberal Democrat who is promising more government, higher taxes, more regulation. That's the last thing that the economy or business needs. But right now, this is a bubble. It's all about perception. And right now, the perception is a Trump victory is bad for the markets and good for gold. And we'll see what happens. But, you know, I think even if Clinton wins, even if there's a knee-jerk celebration in the markets, I think you want to sell into that, because this is not good for the U.S. economy. And long-term, the stock market has a lot to worry about.
Ed, what do you see happening in terms of the Fed and interest rates?
What I see happening basically is the Fed wants to hike interest rates here, okay?
In December, right?
In December. They've been saying they're going to hike. First of all, if they don't hike, then they've lost all credibility, any credibility that they already haven't lost. So they want to hike interest rates, and the data have been good enough for them to be able to do that. You know, the unemployment number is down to 4.9%. We're looking at 170,000 jobs per month. That's good enough, and so they're going to do that. Only if Clinton wins. Now, if Trump wins and we see the market fall out of bed, we see the dollar fall out of bed, the bond market go haywire, then you might see the Fed actually hold on in December.
Really?
Yeah.
Peter,
I disagree. I don't think the Fed wants to raise interest rates. If they wanted to raise them, they had plenty of opportunity to do that a long time ago. I think they're stalling. I think they're making up excuses because they realize that they can't raise interest rates without putting another hole in this bubble. They don't want the stock market tanking like it did in January when they raised interest rates last December. So I think they want to keep talking the talk, but they can't walk the walk. They want people to think the economy is strong enough for a rate hike, but not actually raise rates and disprove that.
He doesn't think the economy is strong enough. For
Yeah,
what do you think?
he and I pretty much, we agree that the economy hasn't been strong enough and for the Fed to be able to do it. Where we disagree is I think that the Fed really does want to raise interest rates, but they just haven't been able to do so.
Okay. And really quickly, Peter, you mentioned gold, but where should people be right now? I mean, where do investors go in this cloud of uncertainty?
Well, I think you should be long gold going into the election if you're a trader, because I think that a Clinton victory is already baked into the price. And even if Clinton wins, I think it'll be a buy the rumor, sell the fact in gold, which would be buy gold on a Clinton victory. There may be a knee-jerk spike up, but I think that you would want to sell into it. On the other hand, if Trump wins, it's going to be a huge run in the price of gold. I mean, the markets are ready for that. They're all ready to hit the buy button if Trump wins, and you could see a $50 or $100 pop in the price of gold in dollars. That's basically what happened to gold on Brexit. Certainly in pound sterling terms, I've never seen a move that big in the price of gold if you wanted to measure it in pounds. So I think that would be a good trade. But long term, I think gold goes up no matter what. And in fact, in the long run, I think Hillary is even more bullish for gold than Trump, because I think her policies will be a bigger disaster and lead to more inflation, more money printing, more deficits. And that's why people buy gold as a hedge against currency debasement and inflation. And we're going to get that in spades.
Peter and Ed, thanks so much.